Hey guys, welcome to the very next episode of the Investing in Nashville show. And today we have on Troy Stackhouse. He's a super great guy and a successful developer here in Nashville. We really sit down and talk about some of the projects that he's done and some of the things he's got coming up in the pipeline. So we really appreciate him coming on. Enjoy the episode.
By the way, this is one of my favorites.
Is it good? You like it?
I love Stag.
All right, so one of the things that we like to do is sit around, drink bourbon, and just talk about business, talk about real estate. And Troy Stackhouse, you are the president of
Urban Core Homes.
Urban Core Homes.
Yeah.
And you said you're a dad?
I'm a dad. I've got a 2-year-old little boy who's all over the place right now and doesn't stop talking, doesn't stop playing with construction equipment.
I got a 4-year-old, and I'll tell you, it doesn't stop at least at 4. That's all I know. I mean, I don't. He is. He's the same way, constantly going all the time. So
yeah, it's fun.
Yeah. So anyway, before we get to started, we did. I did get to see your massive bourbon collection.
Yeah.
So all right, favorite bourbon. It's hard. I know. It's hard to say what your favorite bourbon is.
Yeah.
But if you only had a bottle of anything.
Well, honestly, and it isn't because it's sitting in front of us, but the
you
Stag.
Like the Stags?
Stag. I'm a big Weller fan. 107, 12.
Yep.
And my best value bourbon, I tell people, is, well, 2 of them. 4 Rose is single barrel, and Russell's Reserve 10-year single barrel.
The 4 Rose small batch is an incredible bourbon. I think so.
Absolutely.
It's affordable.
Yeah.
Like you said. I mean, you can go in, you can get your hands on it pretty easily, and it's a good bourbon.
Yeah. I love sharing that with other people too. Hey, you want to start with a good bourbon for $30? There's a handful of them. So
one of the things that I'm a big bourbon guy. One of my main closing gifts is actually not a bourbon. It's the Jameson Black Barrel. If you ever tried that,
I haven't.
Really smooth. I like it a lot better than the typical Jameson. It kind of has that different aftertaste to it, but it's a good.
I'll try that bourbon.
But so anyway, president of Urban Core Home. So how'd you get here? What's your story?
Yeah, so I moved to Nashville in 2008. Right in the middle of the downturn, I guess the start of the downturn. So nobody was hiring in the construction world. Come from a construction background. So I went into insurance adjusting and did that for about 5 years. And a friend of mine who I worked with in insurance adjusting, Jared McNeil, he has Prime Nashville now. He was flipping some homes on the side. He kind of encouraged me to start doing that as well. And so I started doing that and eventually got busy enough with that, saved up a little money, and decided to quit my job and take a run at it, which is when I went into business with my dad, who's always been a contractor my whole life. So start out there.
And you originally was from
Indiana.
Where? Indiana. Okay, yeah. And you did he? I guess he built homes in Indiana.
Yeah, so he built custom homes. I grew up, helping him out here and there. Certainly wasn't full time or anything. Didn't know if that's what I wanted to do for a living growing up, even. But fortunately, I learned how to pound nails and hang drywall and roof a house, which I don't want to do anymore. And, all that fun stuff. So gave me a good foundation for at least managing projects and knowing how to do things correctly. And I'm a big fan of building science and just learning how to do things better ways. I saved up some money and just from flipping houses on the side and from my career in insurance, and quit my job thinking, all right, if this doesn't work out, I'll just go back to the insurance adjusting world. And there's always, it's a pretty recession-proof industry. So that was, I think, May or June of 2013 when I quit my job for good. And so from there, my dad and I ran Odyssey Construction, which is contracting side of things, and I ran Urban Core Homes as the development side.
Right.
So I would finance a few things myself, but also take on investors. We'd partner on some projects, and Odyssey Construction would build them for a fair price.
Right.
Obviously, I'm not trying to just make money over here and over here. So that was how I did things for a few years until Ryan came on board, and we looked at the best use of time and quite honestly profitability as well. We're making a good bit more money developing
as opposed to the construction side.
As opposed to the construction, and the construction side was occupying a good bit more time.
Right.
And so the goal from there was to find other builders that could build the product that we want, and a quality product.
Right.
And then we're just going to be developers and kind of manage the process from finding the property and analyzing the best use and working with the banker if there's an investor, designer, architect, all that stuff. Yeah. And just manage the project all the way through. So that's really what we've been doing for the most part the last few years. I've done a couple of builds myself, historic renovation last year in Sylvan Park where I was the investor, contractor, project manager.
Right, all of it.
All of the above, which is fun when I don't have 20 of those going.
Yeah.
And I've got 2 of them going right now.
Yeah, it can be a lot of work. I mean, where I do at this point, I'm doing primarily residential flipping, right? That's kind of what I do.
Yeah.
But we've also got our eyes on some development property too, because to me, that's kind of the direction I want to go to.
Sure.
Just like you said, a little more profitable it feels like. So what was your very first project as Urban Core?
Yeah, my very first project was a townhouse in Antioch off of Hickory Hollow, a little bit off Hickory Hollow. This was 2012, I think. And a banker that I still use today, Melinda Bailey, she's the one that gave me a shot at this. So big thanks to her. I bought a townhouse for $45,000, put about $13,000 into it, and sold it for $86,000.
Wow!
Was thrilled. I think that same townhouse is probably worth like $200 now.
But especially 2012 to now, right?
Yeah, exactly. So that was the very first project.
It's crazy to think that had you been able to see, like, I think about the difference Nashville is between 2012 and today. I mean, it's mind-boggling to see the growth just through the roof.
Yeah, absolutely. Yeah, different neighborhoods as well. The lot values is a big thing. I mean, which obviously, in my case, I had to have cash flow and return on these projects. I couldn't just buy a bunch of lots and sit on them. Right. But, you see lots in the nations go from $45,000 back then to, I guess, what are they, north of $300 now for a 2 build. So, yeah, craziness.
So what's the, fast forward now that you're a developer, you've got a lot of big projects. What's the biggest difference that you see between 2012? I mean, obviously the price point. Sure. The price point is huge. Like, has there been a big difference in the process between then and now?
Yes and no. For me, yes. Yeah. I guess I'll say, first of all, I've surrounded myself with a really good team. Ryan, and then we've partnered with Steve Mabey and Nathan Weinberg over at North by Northeast on a couple of our bigger projects. Yep. And we each have kind of our own unique strength in the team. So that's allowed us to take on some projects where, we have 4 minds working to think outside the box and make the best use. The biggest change, I guess, logistically is just the workload of contractors as well as codes and planning and all that stuff that it takes a long time, and you try to be patient with it and just do things as fast as you can. But as far as difference in projects, we've really just had to shift our mindset to think about what other people aren't doing. Right. Back then, we did a lot of just flips and two build, new construction, one and two build stuff that we could buy the lot for a decent price. Nowadays, that's getting pretty hard to do that unless you're the contractor and have everything
from the
in-house.
beginning to the end.
Yeah. So right now, we've got a 17 unit little cottage community in Madison that we've got 5 units that are framed up and kind of working on that project, which is, I think it's $4.5 million project, and then mixed use over in the Nations.
The mixed use is the Boomerang, right?
Boomerang.
Yeah. So you've got the Briar going right now. You got the Boomerang.
Exactly.
And then you did what? 7th Garfield, right?
Yeah. Actually closing out 7th Garfield.
That's impressive. That's impressive. And so I look at these and I think, man, these are. It's a huge, and that's the thing that I'm trying to look through is, going from a single family, one build back in 2012, and now you've got the Boomerang, you got the Briar, which is fascinating. You've got, like you said, 7. You got some gorgeous projects. What do you think the partnership has been a strategic advantage? I mean, what do you think you wish you would have done early on? Now that you know what you know now.
Sure.
So for somebody just getting into it, into wanting to develop, whether it's a 2, whether it's a 42 build. Yeah. What do you think you would do differently?
Yeah, I think the biggest thing is just developing genuine relationships with people and learning about them as a person, knowing that you're going to be able to work together. Before you explore any big projects, I would work together on a smaller project. I think that's my partner on 7th and Garfield is a really good friend as well. And we met through a banker, but did a small project together, went great. Personality was a great fit, and that led to 7th and Garfield.
Right.
So, and same goes for the Briar and Boomerang. Steve and Nathan are our partners on those, and we have very much the same ethical outlook on things. And it's not just about the money for us. Obviously, that's a necessary part of it. But developing those relationships and then taking baby steps to grow organically. I mean, I don't know that I would have wanted to jump into a $4 or $5 million project back in 2012, and I certainly respect folks that do. But in my case, it was better for me just to take baby steps and grow from that $50-some thousand project to the next one was $110,000 project, and then it was a $200-some thousand project, and then a 4, and then it just kind of grows over time. And so, that took me 5-6 years to get to that $3 to $4 million threshold. Yeah. So, but partnerships are an important part, and finding partners that you can add value and they can add value, obviously.
So tell me about that. I mean, going back, the idea of being on the same page, the ethical piece of that, because I do feel it's very tempting when you look into, so many people want to get into Nashville or just getting into investing it purely for the numbers, purely for the income, which again, like you said, it has to be profitable. Tell me about the way you look at, all right, being on the same page, the way you look at it, the way you kind of approach business and life in general, and how does that influence the partners you partner up with?
Sure. Yeah, I think, in my case, I'd certainly credit my parents and what they've instilled in me as far as, just doing the right thing and not being greedy. Knowing that money is not going to buy happiness, and you learn some of that through experience as well. But as far as the ethics side of thing goes, it is a balance where, I found myself early on just overcompensating. I take my projects personally, and so if my investor's not making money, not making what we hope to make on a project, a lot of times I'm just eating some of that cost and not even telling them. But you also have to create healthy boundaries as well,
Right.
where there's accountability on all parts. And so, sure, if you make promises, you keep those promises. But in real estate, there's a lot of risk involved, and so you're taking that risk with a partner, and make sure that partner understands the risk and is okay.
Yeah.
If there's a less favorable outcome on the risk.
Yeah.
So
how do you manage that? How do you manage those expectations? Because, I mean, like you said, realistically, you can get into a deal. I mean, at the end of the day, this is investing, right? Like it could come out on the back end very well. And at the same time, you could lose money or at least break even in a lot of things. Like how have you learned? What's an example of you learned like setting those realistic expectations?
Sure. Yeah. So a lot of times when I would do just projections on a project, I would do kind of my awesome scenario, certainly feasible and decent scenario, and then a worst case kind of thing. And I think generally just showing that to an investor and saying, look, we could just break even on this, and that's a possibility if we run into a lot of unknowns along the way. But feel good. I have to feel good about it. And going back to the taking a project personally, even if it wasn't my money, my down payment and my financing and all that stuff, I still acted as if it is, and it probably was more stressed if my investor wasn't making money.
That as opposed to yourself.
Yeah, if it's my project alone, I'm my own boss and answer to myself. So I think it was easier to do that than not make as much as expected for an investment. And look, I mean, it happens. I certainly want every project to be as profitable as possible. But at the end of the day, some projects, being an investor, it's not a straight line kind of thing.
Look, I mean, sometimes you buy property and it ends up taking more money than you think, and you ends up holding it a lot longer than you think, and it's just part of it.
Yeah. Well, I'll give you an example. Early on, I had a great learning lesson that fortunately wasn't more expensive than it was, but with a couple of partners, I bought a piece of property in Salem town that, at the time I was very green. I think it was my third, I think my first new build property, and didn't really know the extent of due diligence I needed to do. And went to pull permits, had plans, had everything drawn. In fact, I think we may have already pre-sold the house before we started it, and went to pull permits, and there was a huge sewer line going right through the lot.
No.
So, I think we paid $62,000 for this lot, and then at that point it wasn't worth anything other than a big yard for the neighbor, and so that's actually what we did, is sold it to the neighbor for a bigger yard size. So we lost money on that, and it only takes one of those for me to be like, all right, we're going to get thorough on this stuff now.
So what do you recommend though? Like for somebody getting into that, let's just say they wanted to get into new builds. What do they need to look out for? Like what's that first step they need to start thinking about?
Yeah, I think for me, a huge help is I don't really have time to go sit at codes and get all the questions answered, but talk to other folks who've got some more experience, and I'm happy to talk to whoever to come up with a list of the due diligence that you need to run on a property. Stormwater requirements, water sewer locations. There's a list of everything you need to go through. So that's my very first step, making sure that zoning complies with what you're trying to do. An R8 lot, a lot of people think, oh, I can build 2 houses on it. Right. But if it's 7,000 square feet, you can't. So I guess find some folks that can help you. And I think there are plenty of experienced folks that will help you come up with that list of questions that you want to get answered right off the bat.
Right.
But also, getting a team together of, a builder would be a huge one. and spend the money on a designer and an architect. You know, on a small flip, I think it's a little different, especially with somebody that has an eye for it. But when you're transitioning to new construction, I would certainly say get an architect, get a designer, look at the houses that are selling quick, and go talk to those people.
Yeah. So I'm going to shift gears for a minute to your big project you have right now in the Briar, right, in Madison. I was reading about it and kind of getting an idea for it. You know, it's been a long project, and you know, I think that when you're going in and you're building a project like this, you got to get a lot of buy-in. You got to from the local government. So tell me, what have you learned on that? Can I tell us, walk us through like what the Briar is, and then like what are some of the things you've learned in, you know, getting buy-in from the community and getting buy-in from the local government?
Sure. Yeah. So basically, that project kind of came about from Steve and Nathan contacting us and saying, "Hey guys, would love to partner with you on this," and they were wrapping up the SP process, specific plan zoning for it. Taking it from, I think it was R8 lots, so entitled to build maybe 6 or 8 units to the 17 that it is now. So they had already engaged the engineer, and Nathan had been working with the council person there. So I think, you know, that is a big first step. Like 7th and Garfield, I reached out to Freddie O'Connell very early on and just told him, hey, this is really what we're looking at. What do you think? And then go to the neighborhood meetings. And, you know, I just want to be as human as possible, and I don't want to be the big shot developer by any means. So I walk in there and just have a conversation with them, and you know, get their feedback. And certainly, if it's within reason, we want to shift or make adjustments that are going to please the neighborhood. So. With the Briar, you know, we were fortunate that Nathan is really good at talking with neighborhoods, with the council person, and so he assured them that it's going to be a benefit to the neighborhood. And Nancy Van Rees, the council person, has been really excited about bringing some of that growth over into Madison. So,
it feels to me like Madison it's finally getting to that point where it's really going to catch that wave. I mean, there's already been renovation over there, and it started to trickle in, but it feels like that wave has went from Inglewood over to the East Trinity, and now it feels like it's finally making it into Madison.
Absolutely. I mean, you look at the major intersections, and it's all about taking the risk of moving across that one street. You know, using North Nashville as an example. It took a little time, but you move from Germantown back to Salem Town, and then Salem Town you move across Rosa Parks into, you know, Buena Vista Heights and the Buchanan Arts District. And so it's the same in Madison. You know, I think as Inglewood's kind of filling up with development, I say filling up, but there's a lot of new construction going on. You look at Briley Parkway as the next kind of border, and all right, let's hop across Briley and see what works over there, and is it ready for new construction? I mean, my opinion is yes, and you know, we're fortunately just, I mean, a stone's throw from Briley, so it's kind of north Inglewood. But you know, I think Madison is certainly a great next spot to be looking. And you know, one of our strategies there was just to provide some price points that not a lot of other areas are able to provide. So
do you think that, I mean, moving forward, I mean, do you feel like that's kind of the direction Nashville needs to go? I mean, there's a lot of growth, and I'll ask you this in a minute about the future of Nashville, but I think that is one of the big complaints is, you know, it's higher and, you know, homes and price points, and some people think that's a good thing. Some people think that's a negative. What's your opinion on that?
Yeah, I mean, I think it's a good and bad thing. I'm, you know, frustrated that people can't go buy a $300,000 brand new house without moving outside the city a little bit, and that's what Briar is, you know, trying to keep them within 10 minutes of downtown at that price point. But I also, look at the positives of that, just through neighborhood growth and I'm not mad that my property value has gone up selfishly,
right.
because that's a benefit to my family. But I would love to see more affordable housing, and one of the big things that I think hinder us obviously is land cost, and finding what's the next area we can go and find land for a reasonable price that we can provide that.
So okay, obviously you don't have a magic ball. One of the things I always like to ask is, what from your vantage point, like, what do you think Nashville? What's the vulnerabilities Nashville have, but what do you think is the opportunities? Like, where do you feel like Nashville is? What direction it's moving?
Yeah, well, from everybody that I talk to, which I just try to surround myself with people smarter than myself and who've been doing it a lot longer. Most folks that I've talked to are saying, hey, Nashville's a very strong market, still growing a great deal. And so that's certainly reassuring as an overall statement. But my fears, I guess, would be that we're going to saturate some of these neighborhoods that just are a little bit early for new construction. So, if you go to Madison and build 100 homes in an infill type environment, I think you're probably not going to sell them for what you want.
Right.
So I don't know if that's a vulnerability or just a timing issue.
Right.
But I think as long as it stays, the growth stays somewhat organic. I think knock on wood, I hope we have some time still.
Because to me, it feels like as long as we continue to, the economy, and I was talking to Tyler about this, but the interesting thing to me is it feels like every year we get more and more of a diverse economy, right? So where it used to be entertainment and healthcare, now we have companies and distribution coming in, and it feels like as long as that continues to be the case, I don't think we're gonna be completely insulated, but I think it's going to help us a lot. The next time, not if, but when there's another downturn, when there's another correction, as long as your economy is not built around one specific industry, it just, at least it feels like to me, it's going to help shield a lot of that.
Absolutely, yeah. With some of the financial folks coming from New York and obviously Amazon, all those jobs, that's providing a huge boost in job growth, and those folks have to live somewhere. So that's huge for our industry. Obviously, I think the balance on that is not giving away the farm from the city standpoint.
Right.
And I know that we want to incentivize them to come here, but at the same time, and I certainly leave that into Mayor Cooper's hands and all the folks that again are way smarter than me. So we'll just hope that they can work that balance correctly. So.
All right. So a couple more final things before we get done. I know you're really big into the ALS. You're a big proponent. I notice a lot of people that are really impactful in their community also have a spirit of giving, and it feels like that's one of the things. So tell me about that. Tell me about kind of like how you got into that and why it's important.
Yeah. So a friend of mine, Tim Shaw, he used to play for the Titans. Was a linebacker with them as well as a couple other teams. I met him actually through real estate, through a realtor that I was working with, and great guy. Just hung out with him a few times, and another guy that we know came to me and we started talking about putting together a golf outing to raise money for ALS awareness and just donating some funds towards something that's going to benefit those living with ALS. And we, talked to Tim about holding that event in his honor. So yeah, we started the T. Shaw Strong Golf Invitational. This past year was the third year of doing it.
It's awesome.
Yeah, and something that, you know, I love that side of things, and you know, bringing other folks in the industry into that. But you know, Tim, he's been living with ALS for I think 5 or 6 years now, and man, he's a warrior.
Yeah,
and he's still very passionate about everything he does, and I love to see that. And I've loved working with him and being his friend.
Yeah,
so
that's awesome.
that's where that kind of started.
Yeah, I mean, I think to me that's awesome, being able to. I mean, because really, at the end of the day, you know, being able to build a platform to be a force for good is huge, right? And I think it's something that we have to. You know, then we kind of have to get in that mindset of like, this is not about just numbers. It's not about just, you know, bringing in an income. Like you said, it's part of it, but it's only a part of the overall story. So I think it's awesome to hear about that. So one more question Ryan wanted me to ask you is, how much do you spend on jeans at Amagino Winners? I'm kidding. You don't have to answer that.
Hey, I'll answer that with this comment. When you wear 29.34, there aren't a lot of places that sell that stuff. So, hey,
I'm kidding. He just wanted me to give you a hard time.
Yeah, no, hey, I'll plug their jeans any day. They make a great product. And, you know,
awesome.
So.
Awesome. Well, man, I appreciate it. I appreciate you taking the time. And if somebody wants to get with you, you know, to connect on a project, or what's the best way to?
Happy to take your call or shoot me an email. I'm happy to give out that info whenever, wherever. So
yeah,
I'm always available. You know, love to grab coffee or lunch and meet folks. And you know, if I can't help them, I'll try to get them in touch with somebody that can.
Yeah, perfect. Well, again, appreciate it.
Cheers.
Cheers.
Thank
Have a good one, my friend.
Appreciate it.